We're very pleased to be joined once more by Dr. Arthur Laffer. He is a distinguished economist, recognized as the father of supply-side economics, best known for the Laffer Curve. I've had the privilege of interviewing Dr. Laffer several times. The latest appearance he made on the show was with Steve Hanke, another regular on the show. We can check out that interview in the link down below. Dr. Laffer is currently the chairman of Laffer Associates. He also advised President Donald Trump during Donald Trump's presidency, and he was awarded the Presidential Medal of Freedom in 2019. So we'll be talking about some of Donald Trump's economic policies and platforms for this upcoming election, as well as Dr. Laffer's assessment of current economic developments. Welcome back to the show. Dr. Laffer, good to see you as always.
Thank you very much, David.
I'd like to start by talking about current market developments before we talk about your assessment of the economy in more detail. So as you know, earlier this week, we had a lot of volatility in the financial markets. The VIX went up at one point to 60, which is a level that's not been seen in recent years. The last time it was this high, it was 2020 during the COVID pandemic. Now there's chatter about whether or not the Federal Reserve should step in and issue an emergency rate cut to fix whatever needs fixing. What's your assessment of this?
Well, the markets did give you a jolt, didn't they? I mean, they sure get your attention. Bang. But if you look at it in any type of longer term perspective, it was a small move in terms of long term growth in the economy and stock market. I think the markets are still up, aren't they, David? From the beginning of the year, they're quite substantially up. And the drop was offset by a couple of days, and I don't know what it's doing today, but it's offset at some. So I don't take this too seriously yet. I think it may have been a political shock that got them 1 day or 2 days going. But with regard to the Fed coming in and doing something drastic and immediate in face of imminent danger, I think is a mistake. I think the Fed should really focus on its balance sheet and not look at interest rates at all. I think they should not try to control interest rates. They should try to control the assets on their balance sheet. And if you go back to, let's say, 2008 or so, the Fed balance sheet was about monetary base was about 860 billion. It got as high as 9.3 trillion, and now it's down about 7.5 trillion in that range, I think it is. They should stabilize the value of the dollar by stabilizing their balance sheet and gradually running the assets off. That's what they should be doing, and they should not be focusing on interest rates per se. Volcker did it very well he always allowed the discount rate to follow markets, and he always allowed markets to set interest rates, not the Fed, and allowed the Fed to follow those interest rates with a little premium of borrowing money from the Fed. That's when we had reserve requirements and the balance sheet was much, much smaller. So that's what I'd like to see the Fed do. There's nothing the Fed can do that would help the economy more than being stable, solid, secure, mature, and be steady as you go. And that is not what they have been doing. When they set interest rates, what they do is they allow the balance sheet to adjust the quantities. And that's not the right way for them to do it. And I wish they'd go back to just setting the balance sheet and letting market rates determine what they should be. And that's where I'm at the Fed.
In regards to the Fed responding to financial market movements, this is a quote from Austin Goolsbee, president of the Chicago Fed. He said in an interview this week, "We've got to be monitoring the real side of the economy. There's nothing in the Fed's mandate that's about making sure the stock market is comfortable." Do you agree or disagree with that?
Yes,
statement?
I totally agree. I think Austin's completely correct on that. I think Austin has to be very careful on how he words things, and I would be very surprised if Austin didn't agree with me totally on what I said before. But don't ask him about that, because frankly, he is a Fed member. I can't really say that, but I think he's a good economist. I think he does his work very carefully, and we have to look at the real side of the economy, and there's nothing more beneficial to the real side of the economy than stable valued dollar. Sound money is one of the finest things that can be done to create prosperity, economic growth, and employment. And that's what the Fed should be focused on, is sound money, stable prices, and then just let the markets go.
Last Friday, the jobs numbers came in. The unemployment rate ticked up to 4.3%. The Somme rule was triggered. There's now a debate as to whether or not we're in a recession. I've heard both sides of this debate. Where do you stand, Dr. Laffer?
I don't really think the recession is the right question to ask. I think really what you should look at is the sort of the long-term position of the U.S. economy over the last, I'd say, quarter century, let's say since Clinton left office. And if you look at it, the U.S. is in a long period of senescence, a very slow growth, poor performance on participation rates, low productivity. Now, admittedly, we did have a pandemic in there and some other stuff, David. That's all true, but we need to have a very sharp reversal in policies that allows the economy to create prosperity and lots of good, high-paying jobs. That's the only way we're going to solve a lot of our social and economic problems. And to me, what I'd like to see us do is go to a low rate, broad based flat tax, spending restraint, sound money, minimal regulations, reduce regulations, especially in energy dramatically, and free trade. And free trade is a critical element in the package. We need to especially be trading with people we don't like, Russia, Iran, China, North Korea. Trade is not a political tool and should never be used as one. And we need to do no sanctions. We need to open up and have economic intercourse with these countries so we can learn about dealing with them, how we deal with them, and create the prosperity. But trade is a tool for peace as well as for good economic strength. It was the Bob Mundell said it beautifully in his Nobel laureate speech when he said that it was the Smoot-Hawley tariff that created the Great Depression, and it was the Great Depression that created World War II. And I think trade sanctions and trade protectionism and all of this stuff is a gross mistake for the U.S. to follow in either creating prosperity or peace.
Speaking of Iran, you brought up Iran. There's now tensions in the Middle East between Israel and Iran. It's speculated that Iran may soon retaliate against Israel for what is suspected as an Israeli-backed killing of Hamas chief on the 31st of July. Now, the U.S. has sent fighter jets to Israel. They've reorganized their aircraft carriers in the region. What do you think should the U.S. be doing right now to mediate this?
I'm going to talk to you what we should have done and what we should be doing in conjunction, David, if it's all right. And I'm going to use a President Kennedy quote here because I'm a huge Kennedy aficionado, as you know. The commencement address when I graduated from Yale, Kennedy was the speaker, the commencement speaker, and I've been a huge fan of the Kennedys, the Kennedy family, and Bobby forever, along with Reagan and Trump. Kennedy said it so explicitly, and let me just say that the best form of defense spending is always wasted. Whenever you find yourself in a situation where you are required to use your military hardware and prowess, that is a clear sign that you did not spend enough. And when you look at this world, strong defense spending is not so you can bomb someone. It's so that you don't have to bomb someone. Putting locks on your doors is not wasted money. Cutting defense spending and being weak in the global community only invites people to test you out. And the reason why we didn't have any major incursions during the Trump administration was because we were strong on defense. The reason why we were so successful under Reagan, his 8 years of not having any problems, is because we built up our defenses, not so that we could bomb someone, so that we wouldn't have to bomb them. If you're in good shape, you're 6'6", strong, and you work out every day, and you're a master of karate, no one's going to try to mug you. And that is where the U.S. should be. Now, the second side of the defense picture is having a strong economy. Now, peace through strength does not mean that we jog 20 miles a day as a country and do push-ups and sit-ups. No, what it means is that we have a very, very strong economy. You want to fight military problems with two sides. You want to make it so that it's very risky for them to ever do an incursion. Number one, that's having strong defense. But number two, you want to provide them with an alternative of trading with the United States, doing with business in the United States, makes them want to be our friends. So you want the carrot and the stick on a global scene. And that is exactly what we should be doing. And that is exactly what we're not doing. We are threatening them with sanctions, with trade restrictions, all of this sort of stuff. And then we're using our weak defenses in there. And it's just nothing but adding to the threat of a real global conflagration. I'm very concerned about the strategies of this country today and what it will lead to going forward.
Okay, so after American troops pulled out of Afghanistan, there's now concern perhaps America may be dragged back into the Middle East if war breaks out between Israel and Iran. So I'm just going to ask you, I'm not saying it will happen, but suppose there is a conflict, a bigger conflict between Israel and Iran. What is likely going to be the U.S. response?
I don't know what it will be. I'm not part of this administration, not part of really what they're doing. But usually speaking, they do try to do little incursions, little ones. We've all already spent a lot of money in Ukraine. What happened with Hamas and Palestine? That's there. We also have now we now also now have the problems in the Golan Heights with Syria, Iranian trained Hezbollah. And we have the Houthi rebels doing missiles going at cargo ships in the Red Sea. So, all of these are there, and we've been escalating. They've been escalating. We now have U.S. jets in there that we use. It is a very slippery slope going through with escalation. As I said, this is a problem that should have been solved long ago. It should have been solved by very strong economic performance on the part of the U.S. with a very major U.S. military buildup so that we don't have to use military force, so that we provide them with an alternative of good use of our markets and peace through strength. We put on sanctions on Cuba, I think it was, David, in 1959. We've had sanctions and restrictions on Cuba. What's that? Is that 65 years now we've been doing that? Have you seen how well that worked? I mean, now that the Cubans have realized that pro-growth democratic economic capitalism is the right answer, they begged our forgiveness and now want to be our best friends. Not. That's not what they're doing. And, this type of strategy is exactly the wrong strategy. You want economic growth and prosperity, strong defense spending, so you never have to engage in a war.
Okay, well, on that note, let's talk about some of Donald Trump's proposed economic policies and his platform overall. You were on his council of economic advisors, I
No,
believe.
I wasn't. No, I wasn't. No, I
No.
wasn't. I've never held a job with any government since the Nixon administration back long ago. I didn't do it with Reagan, although I was very influential in all that stuff. I never took a job with a politician because once you do that, you lose all your objectivity.
Well,
I mean,
can you tell us about how you worked with former President Donald Trump?
sure, I worked with him as an advisor that I would come in. I would never took a job with him. And I was offered jobs with the administration, but I never did because once you become an employee, David, then you have to follow your boss's line. And frankly, I never wanted to do that. These people who take jobs, many of them, not all of them, but many of them, they will rebut arguments they know to be true in order to curry favors with their political benefactors. When I went into Trump, I didn't have a job. He couldn't fire me, couldn't hire me, couldn't double my pay or have my pay. I didn't get paid. And I was able to say what I thought was right on that occasion. No, I'm often wrong, but I'm never deliberately wrong. And that's the way I like to do it with politicians but once you make a paycheck from them, you're all of a sudden an employee, and then you're expected to toe the line and support your boss. And that's not the way I do it. And by the way, I'm also very loyal to the people I work with, whether they be Democrats or Republicans. I'm very loyal in the sense that I don't divulge what they say to me and all that sort of stuff and try to undercut them. That's the silliest thing I could ever do. But I do try to give them the unvarnished view of the world that I have and not give them the view that an employee should give to his boss.
That's an interesting point, Dr. Laffer. Well, he did award you with the Presidential Medal of Freedom, so you did something right.
Well, you know,
Yeah, I mean that's a big honor, Dr. Laffer. Tell us about maybe one or two pieces of
he didn't
advice
tell
you
me he was going
gave.
to do that when he asked me for advice, just for the record. I was
And
very
I
flattered.
understand. Can you maybe before we talk about the future, what's one or two pieces of advice you gave him that he followed and
Well,
we know
during
how.
his first term, he gave me credit for the medical transparency, for price transparency, quality transparency. I have a picture right on my wall here in the Roosevelt room where he gave me credit for that. I was very involved in the Tax Cuts and Jobs Act, which I think was one of the greatest pieces of tax legislation that any president has done in his first term. He avoided a lot of very serious mistakes of delaying the tax cuts, which causes a downturn. Reagan, unfortunately, delayed the tax cuts and caused 81, 82. You can see this in other things. I've advised him on all sorts of things, some of which he's taken my advice, some of which he hasn't, and some of which he clarified the issues for me so that I changed my advice because I thought he was right and I was wrong.
Let's talk about what's happening now. Trump has promised on the campaign trail that he wants to lower inflation. He also said he wants lower interest rates. Now, some people have argued this is a contradictory policy. What do you think?
Yeah, well, I don't think it's contradictory at all. If you go back to the time period when countries had very high inflation rates, there are two components of interest rates, David. There are expected inflation and the expected real return on capital. Together, they are the Interest rates are the expected nominal return on a unit of capital over a period of time, let's say 1 year. So if you can bring down inflation rates dramatically, you will lower interest rates, not raise interest rates. Low inflation countries have lower interest rates than high inflation countries. It's just a matter of fact. But also, very high productivity, high growth countries will also have higher interest rates because that's where the real return is. What you want to do is have a policy of low inflation and very high growth and productivity growth. And that would be, let's say, you'd have the inflation adjusted the TIPS yield. If you know the TIPS yield, you'd have a very high TIPS yield and yet a very low nominal yield. That's the perfect combination.
His running mate JD Vance has said that he wants to lower the dollar or weaken the dollar, presumably to boost U.S. exports if we bring home more manufacturing. Isn't that inflationary, though, a weaker U.S. dollar?
Yes,
Okay.
yes, it is.
So,
In fact, if you go
uh,
back to my piece in the Wall Street Journal in the 1970s, and I said the bitter fruits of devaluation, and I was calling for double-digit inflation in the 70s, early 70s there. If you look at that piece that I wrote in the journal, and it got all sorts of commentary on it, I said if we devalue the dollar as we were proposing in 1972 and on, that we'd hit double-digit inflation. I got critical letters from Paul Samuelson, Milton Friedman, Gottfried Haberler, all the who's who of economics saying I was full of acres and acres of soap suds and horse manure. And lo and behold, it came through because literally devaluation does cause higher inflation and higher interest rates.
is it even possible, Dr. Laffer, for the government to to weaken the dollar or to raise it for that matter, directly
Well, the
manipulate the
Fed can do
dollar?
a dollar. I mean, they can do a
Yeah.
good job. I mean, all the monetary policies of all the global economies, and I'm going to pick them all together, have done a horrendously bad job of creating an environment of monetary instability and weakness. I mean, if you look at it, I mean, all of these countries for the last 25 years, David, have been in a period of senescence. I mean, there used to be a country called Russia. It's gone. China has flipped over now, and with Xi coming down, you can see the Chinese economy is collapsing. In South America, Chile, after 30 years of outperforming every other country, now got a government, and now they're in a tailspin. If you look at Argentina, up until Milei, it was a very bad situation there. I mean, Japan. Can you remember that in 1989, I think it was, Japan had a market cap equal to the US? That's not true anymore, believe me when it isn't. If you look at the European countries, I mean, the EU is sickly, totally sickly. Britain's gotten so bad that they've decided to change the name of their currency from the pound to the ounce. Uh, the United States monetary policy has been exceptionally bad over the last 4 years, but it is still the tallest midget in the crowd. And you've seen all sorts of responses to the bad performance of the dollar. You've seen Bitcoin rising in the market as an alternative private currency. You've seen gold rise sharply as an alternative currency in the world economy. All of this stuff of trying to politicize and militarize the US dollar has been a mistake. You should just create a good, solid currency. And if you create a good, solid currency with stable value and consistency and low volatility, everyone will want to use the dollar. That's what you really want. And that's not what they've been doing.
Well, just going back to the dollar. So yes, the Federal Reserve, the central bank can change or manipulate the dollar. But assuming
It
that's a
does.
separate political entity, the White House can't instruct the Fed to weaken the dollar, can it?
Well, they can, but I don't know if the Fed will follow them. But surely they can. They can. I mean, the White House has a lot of power, David, and it's a lot of power over the currency as well. I mean, the Fed does control open market operations and other things, reserve requirements, and all of that sort of stuff, and the size of the monetary base. But the administration has a lot of power as well. I mean, for example, the huge amount of stimulus spending that went in there did cause the labor force to shrink, did cause productivity to be very low. It did cause the output of goods and services to slow down, and that in turn creates inflation as well. If you think that the administration wasn't complicit in causing the high inflation, the 20% inflation over the last 3.5 years, I think you're incorrect. Now, the Fed has been complicit in it as well, but it's a combination of social spending as well as the Fed mishandling the dollar in the monetary markets that caused the high inflation. My
Okay.
I mean,
All
I'm
right.
wrong a lot, so forgive me. And I know there are lots of your viewers that will think I'm wrong, and they may well be right. But this is where I come out on inflation that you really need to do is have control the balance sheet and also make sure you keep the economy growing as fast as you can. And in that way, you will control inflation.
Basically, for the next administration, whoever is in the White House, you'd recommend them to do what exactly in concrete
Well,
terms
I
to
would make
not have a repeat of inflation? Yes.
Yeah, I would recommend that they control the balance sheet, not expand the balance sheet
Okay.
whatsoever, and that they let that
Okay.
balance sheet, in fact, shrink substantially over the next 4 years or so. And in turn with that, I would allow them to. I would expect them to not try to control interest rates, and interest rates will come back on their own accord, and inflation will be a lot less, I believe.
Do you have an estimate or a number in your mind for where the Fed funds rate should be for equilibrium to be met in terms of
Well, let me
growth
just say
and
that
inflation? Yeah.
Yeah, if you do something like Clinton, which I thought he did a great job of being president, and especially on monetary policy, and under Reagan as well, what you'd like to see is a federal funds rate of maybe 3.5%, something in that range, and inflation down to something very close to zero. That's what you'd like to have. The 3.5% reflects the expected real return on a unit of capital, and with very low inflation. And this is exactly the type of monetary policy I'd like to see operate on. Now, as you probably know, I'm a huge fan of the Bretton Woods Agreement. I'm a very big fan of stabilizing the dollar and making it convertible into some bundle of commodities. Gold. I was Paul Volcker and I were the last two people in the White House in 1970, 72 that gave up our positions on not relinquishing the U.S. Conversion into U.S. dollars into gold. So I'm that way oriented that I'd like to see a commodity-based currency.
Yeah, on that note, let's talk about debt and deficit. Now, you told CNBC in an interview earlier this year, you said, I predict that the next 10 years will be the decade of debt. Debt globally is coming to a head. It will not end well. What did you mean by that statement?
I'm not sure I did say that on CNBC. It'd have to let me just say that debt is an instrument and is a tool, and let me just address the issue. Debt is a tool and an instrument. It's neither good nor bad. If I will lend to you at 1%, David, and let you invest risk-free at 10%, how much would you borrow? As much as you get your hands on. Reverse those two numbers. I'm going to let you borrow all you want at 10% and let you invest all you want at 1%. How much should you borrow? Nothing. But now, debt depends upon the spread. If you can borrow cheap and invest at high returns, you should borrow a lot. When the reverse is the truth, when we came in the 1980s with Reagan, we borrowed a lot of money. We borrowed it and used it to cut taxes, to increase defense spending, to get rid of regulations, to do a freeing trade, all of that. And we hoped that the spread was correct and that we'd end up very successful. We were. We borrowed a lot of money. We created a lot of increase in wealth, and it was just the exact right policy mix at that time. Once the economy had grown to being quite prosperous, I think Clinton did the exact great policy on debt as well. Once we had gotten the growth in the U.S. there, he then paid back the debt. We ran budget surpluses. Debt as a share of GDP declined. I'm a huge supporter of Bill Clinton's and Ronald Reagan's, and I think at both ends of the spectrum, they did it just correctly. There's a time for debt, and there's a time for paying it back. And I think Clinton did a great job in paying it back, and Reagan did a great job in using it to create prosperity.
I apologize. It wasn't you who said this. I misread this as Arthur Laffer Jr. So it was
Oh,
it
that's my
wasn't.
son. He's a
Yeah,
money manager. He's a money
yeah. It was
manager, and that
your
is not
son
what.
told CNBC. Not it wasn't
That's
exactly
funny.
your fault.
That's great. And I love my son enormously, and he's just the greatest guy in the world.
But
But it was
I
my
have
son.
to I have to
That's the
clarify that
trouble
on
when
air.
that's what trouble when you have tons and tons of kids, and all of them really smart, and all of them in different areas. Sometimes you don't agree with everything they say.
Yeah, well, it is a fair point nonetheless. $35 trillion
You
dollars
caught
of
me
debt.
off guard.
Yeah, no, you didn't say that. It was $35 trillion dollars of debt, though, is what we recently surpassed. I asked this question quite a bit, and I get different answers. To what extent will this become an issue for the economy? Presumably, if the GDP keeps growing, it's not going to be an issue, right?
Well, if you can get GDP growth up to 3.5, 4%, which there's no reason why we shouldn't be able to do that over the next 4 years, by lower tax rates, broader tax base, controlled spending, monetary control, sound money, free trade, minimal regulations, we should be able to get good growth rates there. If you do that, the debt won't be a problem at all. But if you continue to borrow money like mad to pay people not to work, that's going to be a real problem at some stage along the lines. And that's where I think my son is completely correct. If the policies don't change, that debt problem could be very, very serious because of how we spent the money, not because we borrowed it for good, productive reasons.
Is there any chance, do you think, for the next administration in just in 4 years to balance the budget, bring the deficit back down to zero?
I don't know if you want to balance the budget, but you can bring the debt down dramatically as a share of GDP. You can do that very easily. When you have high inflation, a lot of the value of the debt is eroded by the inflation. So, a lot of the budget deficits during a high inflation period are nothing more than just offsetting the reduction in the debt due to inflation. So, if you have stable prices and you have no inflation going forward, with low interest rates, there's no reason why we shouldn't be able to bring down debt as a share of GDP quite dramatically to reasonable levels. But you don't ever wanted to get it to zero. If you get it to zero, then what will we do with the monetary base? What will we do with currency? And I mean, all of that would have to be absorbed. There'd be no capital market. Don't worry, that's not going to happen, David. I don't mean to panic you. But debt as a share of GDP in the 40-50% range would not be a problem.
You mentioned sound money, and I'm curious to get your opinion on what constitutes sound money today. Gold, of course. What about
Gold,
Bitcoin?
Bitcoin.
What are your thoughts on Donald Trump's recent announcement at the Bitcoin Nashville conference that he would implement a Bitcoin strategic reserve if he were elected?
Well, I'm going to let the president describe his answer to you rather than me try to tell you what his answer would be. When I look at Bitcoin, I think Bitcoin is an outgrowth of unsound paper currency. I see the rise in the price of gold again as an unsound paper currency response. If you made a dollar, if you made a stable valued dollar that was guaranteed to be constant value in terms of goods and services for the next 10, 15, 20 years, the price of gold would fall to $100 an ounce, and Bitcoin would shrink dramatically. They exist as an alternative, as a private alternative to an unsound paper currency run by government. And to me, I would like to see the government run the monetary policy much more stably, much better, by controlling the balance sheet, by just doing what Paul Volcker did in the late 70s and 80s, and followed on by Alan Greenspan. They did a great job on monetary policy, and that's what I'd like to see the Fed do.
You actually met recently with President Bukele of El Salvador.
Sure did.
El Salvador is famous for being the first country to implement a similar policy. They have Bitcoins in their treasuries. What can you summarize your meeting with him for us?
Well, they don't have many Bitcoins in their treasury, but they do. They're miners of Bitcoin. They have these volcanoes that produce free electricity. So
Yeah,
they've got all these machines running and he's an extremely entertaining man. He's extremely bright. You can say that about a lot of leaders, but this guy has a sparkle, has something to him. He's 43 years old. He's taken the country from being El Salvador from being the highest crime rate in the Western Hemisphere to the lowest. He's really gotten control of the MS-13, the crime rate and the thing. He has gotten control of the country. He wants to make this the most prosperous country in all of the Americas. And I think he's got a damn good chance of doing it. He's the exact type of person. Everyone loves him in the country. All the neighboring countries wish he were their president, whether it be Honduras or Guatemala or Costa Rica or Nicaragua, Colombia. His popularity ratings are huge. They are in his own country. He's appointed all the members of the Supreme Court. There's a unicameral legislature in El Salvador, and he's got control of that. So I think he has a chance of creating perhaps the greatest economic prosperity of a country in Western Hemisphere since Chile, and maybe even including Chile and Argentina. I was down there frequently with Menem, and in Chile as well, down there with Pinochet and Sergio de Castro and Rolf Luders and all the Chicago boys. And I think Bukele has a chance of becoming one of the greatest leaders of the Hispanic Americas in history. And I'm really hopefully working with him and trying to help him do exactly that. But he's got the right person. He's a very nice person, David. You should go down and meet with him. He's fun, he's light, he's entertaining. His brother Ibrahim is very similar. His father was very famous in the country as well. And he's just got all the natural attributes of being a great leader and really focused on prosperity for the country, for El Salvador.
I love to meet him. He sounds
Two
interesting. I'd
and a
love
half
to meet him.
hours I spent with him with Kathy Wood, my student, who Kathy Wood runs ARC, as you know. And we
Yes.
spent it with him. I got this great picture. I should have had brought it with me for you today. I'll show up in the screen.
Yeah,
But
that's
the three of us spending 2.5 hours with him, and he ran circles around me. He made me feel like an old fuddy-duddy. And I'm pretty good with math and numbers and quick wit and stuff like that. Not when he's around. He's got me. I mean, he's got me pinned on the floor 20 times, and nicely. And
well, do you think do you think the US would one day adopt similar policies in regards to Bitcoin?
I don't know. I mean, Bitcoin surely has a potential of becoming a global currency. It's got a long way to go to do it. It's now a great investment asset. And but by the way, if you made a good monetary system out of Bitcoin where you'd stabilize the value of Bitcoin in terms of goods and services, if you did that, you'd lose all the investment returns to Bitcoin, but you'd create all the monetary returns of a sound currency, uninfluenceable by government policies. And that's exactly what you want. You want something that people can trust as a numeraire going forward, and that's what you really need. And that's not where Bitcoin is today. That is where gold has been historically, but Bitcoin isn't there yet. But Bitcoin surely could fill that role.
I'd like to close off on talking about the future of socialism in America, whether or not there's going to be more socialist policies in future generations. This is an interesting bit of research that I read. According to a 2017 poll, a majority of American millennials, so people born, between the 80s and early 90s, prefer to live in a socialist, communist, or fascist nation than in a capitalist one, quote unquote. That was according to a poll. 2019 February cover of The Economist literally read "The Rise of Millennial Socialism." It just begs the question as to whether or not the future of America, these younger people, will start to vote in more socialist policies and what that would look like. What's your take?
I think it's silly, and I think polls are silly on that whatsoever.
Oh, okay,
I
all right.
don't, I don't know of anyone on a personal level who would prefer to give up the pretty girl that he's chasing for all of his friends to share equally with him. I don't know of anyone who would, if they found $100 bill on the street, would sit there and say, "Oh, excuse me, let me give it to everyone else." I have this story. Can I tell you this story?
Please.
It takes me about 3 minutes, but
Okay, go ahead.
I tried to find the most socialist place in America, and of course, the state has to be Massachusetts. The most socialist city in that state has to be Boston. It has to be Cambridge, really has to be Cambridge. The most socialist institution in Cambridge has to be Harvard. The most socialist department in Harvard has to be the sociology department. And the most socialist moment of that sociology department happens to be in the front lawn during a Bernie Sanders rally with Elizabeth Warren up in the front screaming and hollering and cheering and all that. So I got a pillowcase full of $20 bills, David. I tied it up. I took a flight from BNA, Nashville, right to Logan Airport. I got in the cab. I went over to Cambridge. I went to Harvard University. I went to the sociology department. I went right to the rally where Bernie Sanders and all the Fabian socialists were sitting there screaming and hollering. And I got one of those little wooden chairs, and I stood up on it. Downwind was the crowd. And when he finished, everyone was screaming. Like Bernie's hair was flopping back and forth. Elizabeth Warren was screaming and hollering. AOC was in the crowd. It was just very exciting. And I took the pillowcase full of $20 bills and threw it up in the air. And the $20 bills floated over the crowd. And they all dropped in on the crowd. Within 30 seconds, all the $20 bills were picked up by everyone there in the crowd.
Wait a minute. Is this a true story, Dr. Laffer?
Even socialists respond to incentives. And what these people are telling you about is what they would love to dream of, and what they think you want to have them say. But when it comes to individual behavior, people are out for themselves. And what you want to do is be able to harvest and harbor those incentives to being productive for the society as a whole. And these people do not want to live in a communist, socialist, fascist society. Believe me when I tell you that. They want to live in a capitalist society of private incentives, and they behave that way every day of the week and twice on Sunday. And that's my story, and I'm sticking to it.
Oh, wait.
Do you have kids, David?
I no, I do not. Well,
Well, I have six kids. Let me tell you, at the meals there, it's every man or every woman for himself. There is no intrinsic socialist nature to people except in how they want other people to behave,
well,
not
can we
how
can
they
we
behave.
can we comment on some more left-leaning policies that may or may not be introduced and the economic effects if they were to be introduced? First of all,
Sure.
UBI, it's now being tested in several places with varying results, different experiments, different parts of the country. What would happen if we had universal basic income? Let's say, I don't know, a couple $1,000s a year for everybody, not a
I
year, a month for everybody.
don't make it so small, David. Let's make it large so we can see the principle.
Okay.
Let's imagine that we're going to have everyone have an equal the same income. All right. We're going to have just complete redistribution of income so everyone comes out the same. So everyone who makes above the average income, you tax them 100% of the excess. Everyone below the average income, you subsidize them up to the average income. And that is the only way you can guarantee that everyone comes out with the same income. If you actually did that, David, if you actually taxed everyone above the average income 100% of the excess, and if you actually subsidize everyone below the average income up to the average income, I will stipulate today, counselor, we'll all come out exactly equal at zero income, period. These things don't work. They literally don't. When you take from those who have a little bit more and you give to those who have a little bit less, all right, those who have a little bit more will work a little bit less, and those who receive a little bit more will stop working because they've got an alternative source of income. Whenever you transfer and redistribute resources, David, you reduce total output and employment. And if you were able to get exact total income redistribution where everyone came out the same, everyone will work zero. Believe me when I tell you.
So then in that hypothetical scenario, there would be zero labor supply as well,
Why would you
correct?
work if you didn't get any pay? Huh? Tell me, I mean, I know you love your podcast and I love you know, we love what you're doing. But let me make it even more extra. Let's say you had to pay to do your job. It cost you $1,000 per podcast every day, nothing else. How many of them would you do? Well, after a little while, you couldn't afford to do many more.
Well, that's right. Yeah. Yeah.
That's what socialism does, and it's very simple, basic incentives. And if you know if you're taxed over 100% of everything you earn, pretty soon you're going to learn not to work.
Well, taxes. Well, so yeah, let's talk about history. So taxes in the U.S. on the wealthy were above 90% at one point, correct? What was the economic impact of
You're
that
getting in
policy?
very dangerous territory. Have you looked at my latest book called "Taxes Have
Have
Consequences"?
consequences. Yes, you sent me a
I,
copy, by the way. Thank
well,
you very
thank you
much.
for reading it. Not. I have it with Dr. Gene Sinkfield and with Dr. Brian Dimitrovic. It's a complete history of the U.S. income tax. It's complete. We have every single tax return. We know. Now, I can imagine if you raise tax rates on the rich, that you'll collect more revenue. You'll be able to use that to help the poor. I can also imagine that if you raise tax rates on the rich, they'll try to find lawyers, accountants, deferred income specialists, favor grabbers, all of these things. They'll spend the money to avoid paying, and they'll collect less revenues from that. It'll hurt the economy, and it'll make the poor worse off. This is a matter of facts, David. It's not a matter of how you feel. No one gives a goddamn how you feel. It's a fact. Every single time we've raised the highest marginal income tax rate in the US, every single time we've done that, the economy has underperformed. Tax revenues from the rich have gone down, and the poor have been hammered. Every single time we've cut tax rates on the rich, every single time, what has happened is the economy has outperformed, tax revenues from the rich have gone up, and the poor have done relatively well. Those are the facts. Read the book. I can send you the plots and all that, but read the book. This is a thorough. We have every single tax reform. We know exactly what happens when they did it, and that is exactly what happened.
Have
If
you
you
observed a relationship between tax rates and inflation?
Well, sure. When you have inflation, taxes go up very much because you underdepreciate plant and equipment expenditure. It used to be you pushed into higher tax brackets for the same real income. Inflation was one of the biggest tax generators of all historically, and you can see
What
it.
what about the what about the other way around, Dr. Laffer? Suppose we were to raise taxes on the rich and lower taxes for the poor, just suppose, would that incentivize the middle class and the poor to spend more, perhaps raising
It's
inflation?
not spent. What incentives are there for them to do the work? I mean, if you raise tax rates on the rich, what would you, if you were a rich person, and I assume you are, but I'm not going to ask you that question indelicately, but what do you think happens to a rich person who has tax rates raised to where they find them unconscionably high? What do? They hire lawyers, they hire accountants, they hire deferred income specialists, they hire favor grabbers, they hire lobbyists, they give to political campaigns for political favors, and they do all of that. They also have the means to do this. They have the means, they can do this stuff, they have the resources. And that's exactly what they do. In my book, the second chapter, go through all 20 of the most popular tax shelters and genius devices developed by the rich to get around paying taxes. And you can see that everywhere. We've raised taxes in 1932 from 25% to 63%. Guess what happened? The Great Depression. We raised the highest tax rate from 7% to 77% from 2000, from 1913 to 1918. Man, what happened there? You created a calamity. We lowered the tax rates from 2021 from 73% down to 25%. It was called the Roaring Twenties. Inflation went way down. Employment went through the ceiling. The stock market boomed. We have all the records there, David, and all the numbers. And, I love arguing theory and all sorts of wild-eyed things, but facts is facts. And, I don't give a damn how you feel. What happens when you actually do these policies? And it never works out well.
One final question, Dr. Laffer.
Sure, love it. By the way, I do love that. That one I love, and I'm going to make you read that book, and then I want you to interview me on the details of that book, the Great Depression, the 70s, the 80s. You need to know these facts. You're so influential in this world. You make a difference. And if you were to proselytize bad facts, that would be harmful to the planet, and the Lord would look down on you and say, "Naughty, naughty."
with Spider-Man said, "With great power comes great responsibility."
That's true, and you have the great power.
I will endeavor to read your book in its entirety, Dr. Laffer.
You can skim through it. You can see all
next time I will ask you specifics on the chapters. I encourage everyone to check out the book. I'll put the link in the description down below.
Consequences.
Taxes have consequences. Please check out Dr. Laffer's book. One final question, Dr. Laffer, before we go. The idea, and I know Donald Trump has flirted with this idea. He hasn't made it an official campaign promise, but he said that perhaps we should abolish income taxes altogether and replace that revenue with tariffs. What do you make of this?
Well, historically, that's what we did do. I mean, when the founding of the country, we used all of our funds, all of our revenues for the U.S. Treasury were done through tariffs. I mean, that was done. Now, the other part of it was still local governments did it through property taxes. We had a whiskey tax, and sometimes we sold land and that type of stuff. But back in the day, let me just ask you a question. U.S. Total tax revenues a share of GDP in 1910. Total, federal, state, and local.
Okay, let me take a guess. Currently, tax revenues are
43%.
About $3 trillion.
That's just income taxes. Let's get to all of them.
Okay.
State, local, sales tax, payroll tax, all of those taxes. Today, it's probably about 43% of GDP.
So I'm going to guess back 100 years ago, maybe 70%.
No, the total taxes as a share of GDP were about a little bit under 3%.
Wow. Okay. Well, I completely got the wrong assumption.
No,
okay.
But that's why facts are important. You want to see what happened. What happened when we put in income tax in 1913? And it was at 7%. There were a total of 358,000 people who paid taxes out of 62 million adults.
So you're saying when taxes were much higher, when tax rates were much higher, the total income from taxes was much lower as a percentage of GDP. That's what happened.
Oh, when they raised taxes, income from the tax revenues went down.
Yeah, okay.
What they did was initially when the tax codes were put in, less than 0.5% of the adults were subject to an income tax at all. Now, they expanded that from 358,000 in 1913 to 6.5 million by 1918. I mean, the huge expansion of the tax base. What happened to the economy? It did very poorly. What happened to tax revenues when they raised the rates on the average income? The revenues went down. Then when they lowered the tax rates in the 1920s, the election of 1920 was Harding and Coolidge versus Cox and Roosevelt. That was the election. There was all on taxes, all on the income tax. And they cut the highest rate from 77% to 25%. It was the roaring 20s. We ran surpluses in our budget for 11 straight years. Prices dropped during that period. The economy boomed. And the biggest beneficiaries were the poor, the minorities, the disenfranchised. How's that for egg in your beer, old man? See, now you got to read that book and know the facts. What caused the Great Depression? We raised the highest marginal income tax rate in January 1st, 1932, from 25% to 63% and reduced the bracket ranks. I mean, we had the Smoot-Hawley tariff, which was signed into law in mid-1930. That was the biggest tax increase on traded products. It caused the market collapse in the Great Depression. It caused it.
Well,
Go look at those numbers.
Would tariffs be pretty much the equivalent of a flat tax because everybody's paying the same?
They could be. It depends on how it's used. You need tax revenues for government. We all understand that. We all understand we need government. We need the judiciary. We need military. We need all of these things, highways, schools, all of that stuff. We do need that. But you need to collect it in the least damaging fashion to the economy. You want the lowest possible tax rate on the broadest possible tax base. So you provide people with the least incentives to evade, avoid, or otherwise not report taxable income. And you give the least number of loopholes where they can put their money to avoid paying taxes. That's the North Star, David. You need to do that. You need then spending restraint. You need to bring government spending way down. It's way beyond where it's needed today. You need to bring government spending down. You need to minimize regulations. We all know we need regulations, David. You can't drive on the left-hand side of the road one day and the right-hand side the next day. You can't do that. But what you want to make sure doesn't happen is that you go beyond the specific purposes at hand and create a lot of collateral damage. You don't want that. You want minimal regulations, sound money, spending restraint, low rate, broad-based flat tax, and free trade. And then get the hell out of the way and let the markets solve their problems themselves with the right background of government. Government can be the most powerful tool for prosperity around. It can also be the biggest killer of prosperity around. It depends on how you do it. And that's all I'm saying is think this thing through. If you don't eat any food at all, you're going to die. If you eat too much food, you're going to be a big fat guy and die. There's a proper amount of eating. There's a proper amount of government. There's a proper amount of all of these things in moderation. And that's how you should run your country, right?
Well, we don't want to be too anorexic or too fat. You're absolutely
That's
right.
Exactly right. And we don't want too much government or too little government.
The book is called your book is called Taxes Have Consequences: An Income Tax History of the United States. It's on Amazon. We'll put the link in the description below. Everybody should read it, including me. Everybody should read this book. And
you thought it was just a little gifty-wifty to you, David. I'm just such a nice guy, and God, don't want to lead that professor's crap. I don't want that to
You signed it for me too. Very nice.
Well, I tried to make it nice so that it would entice you to read it and learn something from it. And then you should go back to my book in 2014, New York Times bestseller, The Wealth of States. Which states perform the best in the U.S. and which ones perform the worst? Guess which ones do? The zero income tax states do much better than the highest income tax states. Those states that have adopted income taxes in the last 60, 70 years have way underperformed the states that didn't. And, you got to look at facts. This is about facts, not how you feel. And, I don't care what your feelings are. If it's not based on sound facts, it's bad economics. And that's why Harvard and Yale and Princeton and these guys have bad economics, is they don't base their stuff on facts. They are not compensated at those universities based upon their actual performance in running something. Business people are. If you run a company badly, you lose money. If you run your economics class badly at Harvard, you get promoted.
We'll let the dean of Harvard comment on that one. Thank you very much, Dr. Laffer.
My pleasure, David.
We'll speak again soon, and we'll talk more about your book next time. Everyone should check it out. Where else can we learn from you, by the way, before we go?
I don't know, but read the. Okay. I'm 84 years old, for God's sake.
Do you have a blog? Do you have a? I don't know. Do you have a?
I have. Did I ever show you this? Look at this. Look at this.
Okay. All right.
That's it. I don't do emails. I don't do texting. I don't do any of that stuff. You can look up. There's a Laffer Center. 1065 Institute. You can see a lot of our stuff there. You have blogs all over the place. You've done 3 or 4 of them on me. You know,
We'll put links in the description.
oh,
Yes,
you
in
can
the
get
links to
my
our
class
prior.
at Hillsdale. My class at Hillsdale. I have a lecture series at Hillsdale, free,
Okay.
that you can get. And so it's a lot of stuff you can get from me. It's just common sense, basic incentive economics.
Okay. Great. Oh,
Thank
thank you.
you.
Thank
My
you.
pleasure,
Thank you for
David.
watching.
You are a
Uh,
delight, by the way. Thank you very much.
Appreciate it. And thank you for watching. Don't forget to like and subscribe.